What is up, everyone? Welcome to Investing Club. In this video, I'm going to be telling you why the stock market will keep going higher. And yes, you heard that right. I said stock market keep going higher. Now, before we get started, complete disclaimer, I don't know what's going to happen in the future, and no one does. But what I'm going to do in this video is show you a few pieces of evidence that suggest that stocks could keep going higher. And I'm not a financial advisor. None of this is any sort of financial advice. I am just presenting you information, and you can take that information and do what you want from it. Now, if you're someone who watches my videos, you know I am still bearish on the stock market for the most part. Now, while I do expect the stock market to fall again at some point, I'll be the first to admit that I have no clue what's going to happen in the short term, and it very well could keep going up. And here are a few pieces of evidence I found that show there is a high probability that stocks will keep going up for the near term. All right, so let's get started. Here they are. First is we have a ton of bullish momentum in the stock market right now. Now, what I mean by this is there's really no roadblocks for price in the near term. I'm someone that talks about moving averages and support and resistance levels a little bit. And while that's not something I focus on, I acknowledge that they are important. And so here's a chart that has the 20-day moving average, 50 and 200-day. And what you can see is the price has gone past all of these moving averages. At first, I was expecting this price to hit one of these moving averages and then reverse back down, but we have now broken above all of them. And recently we broke above the 200-day moving average, which is considered a long-term indicator. And so since we are now above that, it is pretty bullish for the stock market. And there's really no more resistance levels in terms of seeing a place where a bunch of people are going to start taking their profits. It's pretty much clear skies from here. Again, anything could happen. At any point, a market sell-off could start. But from a technical perspective, it looks very good right now for the stock market to keep going higher. All right, number two, don't fight the Federal Reserve. Right, that's all anyone's been saying lately, and it is true. And what's been happening, the Federal Reserve has been printing money like crazy. Why? Because people have started losing their jobs, people have been spending less money, there's been less money in circulation, and so the Fed feels a need to stimulate the economy again, which is what they've been trying to do. And when the Fed prints money, what are they doing? They're increasing the money supply. The amount of money in circulation is going up when the Fed buys bonds. Now, how does this affect the stock market? It increases liquidity across the whole financial sector. So people that are trying to get in and out of bonds, they're able to do that easier thanks to the Federal Reserve being right there saying, we'll buy any bonds you have. And because of that, more money is readily available. And in theory, a lot more of that will go into the stock market when there's no more fear of liquidity drying up. And another thing that's going to happen is as there's more money in circulation, more of that is going to go towards stocks, and it will push stock prices higher. And so what I have right here is a chart, which is the SP 500 market cap compared to the Federal Reserve M2 money supply. That's all the money in circulation. And the Fed has been printing over the past few months. So we are now at a low that we haven't seen for around since 2016. And so as the Fed prints more money, stock prices should go higher, right? And that is proven by this chart. The orange line is the 20-year average for market cap over money supply. And what you can see right now is we're below the 20-year average. So based on the amount of money in circulation right now, the stock market should actually be higher. And that is something that we could see happen very soon. The stock market could go up to reach this 20-year average of the market cap compared to the money supply. Now, I'm not saying that the Federal Reserve will save the stock market from impending doom, but from this data, it's likely that we could see a stock market increase, at least in the short term. And number three, this is a big one. Household retail investors are still bearish. And so what does this mean? This means based on the data, the vast majority of individual household investors still think that the stock market will crash again. Now, here is a chart of the sentiment report from Daily FX, and this is a very useful graph, and I will put a link to the website. And I would highly recommend bookmarking this page and just taking a look at it every so often because it really tells you where the sentiment in the market right now is. So right now, as of June 5th, retail data shows 26% of traders are net long. So right now, only 26% of retail traders are bullish on the stock market. And so what has this shown in the past? You can take a look at this chart. On the bottom two lines, when the red line is above the blue line, it means that there are more bearish traders than bullish. And so what happens in the stock market? Most people get fooled most of the time. The stock market will usually move opposite to what most people expect. And what you can see is from all the way up from the beginning of this year until February, most traders were bearish and the stock market kept going up. That's when it was going straight up in a straight line. And then we saw the huge crash. And what happened? A lot of investors turned bullish and they were saying, well, let's start buying the dip. And during that, we saw the huge crash. And right after that, the majority of traders became bearish again. And ever since that point, we've seen stock prices go up like crazy. And until this changes, until the majority of household investors become bullish, this isn't likely to change. Stock prices are likely to continue going up. And why does this happen? Why, if the majority of people are bearish, would the stock market go up? It's because when most people are bearish, what does that mean? They've shorted the market and they sold all their stocks. So when people say they're bearish, they've already sold their stocks, they've already shorted the market. So who's left to short the market and sell their stocks after that? Once the majority of people say that they're bearish and they expect stocks to fall, that means everyone that wants to sell has sold already. And so when you see these huge percentages of bearish traders, it means everyone's already sold their stocks and shorted the market, and there's really no one left to short after that. So what does that mean? The only pressure in the market will be buying pressure, which will keep pushing stock prices up. And this is something that could very well continue until the majority of traders become bullish, and that's when another crash could happen. And here's another chart that will show you it's not only retail, it's also global investment banks. So global investors usually have a certain allocation towards stocks and towards bonds. And so right now, what you can see from this chart is global investors are more in bonds than they are towards stocks. They're overweight in bonds. And why? It's because they get scared like everyone else. They saw the stock market crash and they said, I'm going to get in cash. I'll buy some bonds for more safety. And now with the stock market going up, the chances are that a lot of these global investors are going to become more confident. They say, all right, I'm confident in the stock market again. Let's put some of this bond, we'll sell off some of these bonds and put it towards the stock market. And again, this is something that could drive stock prices higher as more of these global investors start rotating again from bonds to stocks. All right, the fourth reason is the S&P 500 dividend yield is greater than the 10-year Treasury bond. And this is something that has not happened too much throughout history. Interest rates have been so low for so long, we've gone to a point where the dividend yield on the S&P 500 is actually better than the 10-year Treasury. And so right now, the S&P 500 dividend yield is around a 1.9%, and the Treasury yield is around 0.6%. And so what that means is you can either invest in a bond for 10 years that will give you 0.6% a year, which means accounting for inflation, you're actually losing money each year, or you could invest in the S&P 500, a group of companies that will appreciate in value along with a 1.9% dividend. And so what this means for investors is, the bond yields are so low. To get yield, you really need to be investing in the stock market. Why would anyone invest at 0.6% a year when you could buy the S&P 500, buy and hold, you get 1.9% a year and the capital appreciation that comes from holding businesses. And history has shown us in these rare events where the dividend yield of the S&P 500 is higher than the Treasury yield, going forward from that point, stock prices tend to go up as more people rotate from bonds to stocks, realizing that they can get a better return in stocks, not just from the dividend yield, but from the capital appreciation as well. And lastly, markets tend to keep going up after a huge surge in prices like we just saw. The last 50 days was on the list of largest 50-day S&P 500 gains, right? Over the past 50 days, we gained 39.6%. And that has only happened 9 more times in history. And going back each of these 9 times where we've gone up over 20% in 50 days, what happens from that point? And every time we've had a 20% increase in 50 days, stocks have gone even higher 12 months after that. And even 6 months from that point, stocks have gone higher. And most of the time, all the way down to 1 month, stocks continue moving up after an event like this. And so, of course, is this a guarantee that stocks will continue going up? No, it's not. But if history tells us anything, it's that after stock prices have gone up so high, so fast, it brings in a lot of investors to the stock market that will keep pushing prices higher. And so those are the 5 reasons why I think stock market could keep going up in the short term to long term. And so am I buying stocks now? I'm not buying stocks right now because I see they're all way too expensive. I'm waiting for some sort of pullback to buy more stocks. Now, Even if you're someone that believes stocks will keep going up, they don't go up in a straight line. We'll see stocks go up, then correct a little bit, and then keep going up with these little corrections along the way. And it's during those periods where it is the best for buying stocks. So that is where I will be waiting. So that's where I'll be waiting to buy some more. Keep updated with the channel. We'll make updates for when I'm buying a stock, whether it's a new one or one I already own. And let me know in the comments what you think will happen. Will we see stock prices keep going up, or will we see another stock market crash? Interested to see what you all have to say. If you learned something from this video, hit the thumbs up button, subscribe to the channel. I post videos like this multiple times a week about the stock market, and I will see you on the next video.